Wealthy people are focused on growing their wealth instead of just trying to earn more money, because the majority of people are working to earn money to buy nice things. Wealthy people want to earn more money, that way they can earn more money. They want to use their money to earn them more money, because your money can work 24 hours a day while you can't. And I'll give you an extreme example of this to show you what I mean. In 2021, the CEO of Coca-Cola made just under $25 million. How did he do that? Because he worked his way up the corporate ladder, he worked his way up to earn more money, and he worked his way to the C-level executive of Coca-Cola, which is why he gets to earn the big bucks of $25 million a year. That same year in 2021, Warren Buffett, who is an investor in the Coca-Cola company, he doesn't go and work in the Coca-Cola company, he owns a piece of the Coca-Cola company because he used his money to buy a piece of the company. In 2021, he earned over $700 million in dividends for doing nothing except owning the stock. Did he have to spend a lot of money buying it? Absolutely. But this shows you the power of you working to earn through your wealth as opposed to earning through your labor. Now, this is the key. I'm not saying don't go and work a job. I'm saying use your income to go out and invest. You don't have to earn $1 million or $25 million or even $100,000 a year to start doing this. But what you need to do is to put some money aside, whether it's $100 a month, $10 a month, $5 a month. Start with whatever you can. Put this money to work in your investments, and now your money can earn you money even when you're not working. And this brings us to number 2. How do wealthy people shield their money? The first part to this is understanding how our tax code works, because as an attorney who's not your attorney, what I can tell you is that our IRS tax code looks at money differently depending on how you earn it, and depending on how the IRS looks at it, they're going to tax it differently. The IRS has 3 general categories or buckets of income. You have ordinary income, also known as earned income. This is your W-2 income, your money you make from your job. Then you have portfolio income and passive income, both of which are investment income. And portfolio income, think of this like your long-term capital gains from the stock market. If you buy a stock for $100 and you sell it for $500 2 years later, that's portfolio income. Your passive income is the money you make from your real estate rental properties. So if you're making money from real estate rental properties every month, that is passive income. The reason why the IRS does this is because now they categorize these incomes differently, and then they tax you differently depending on how you earn this money. Your portfolio income and passive income come with either lower tax rates or higher tax deductions that you don't get when you earn your money here. So while most people are working consistently for this bigger salary, wealthy people are working to grow this and this, because number 1, this can earn you money 24 hours a day while your W-2 income can't, because you gotta sleep. And number 2, this comes with bigger tax breaks that you don't get over here. The second thing that wealthy people do to shield their money is they stop spending money on things that they cannot afford. What does that mean? If it doesn't make you money, if it is a liability, then what they want to do with this liability is buy it cash. You don't want to go out and finance these liabilities. The problem is, in American culture today, it is so easy to look rich. We sell this dream of having a nice car, having the big home, having the expensive watches, having the fancy clothes, and having the nice vacations. And everybody wants to have it so they can share it on social media, on Instagram, on Facebook, on Snapchat. The problem is it's very easy to buy these things. You can buy whatever you want on your Amex, on your Visa, or your Discover, but then you got to pay it back, plus interest if you don't have the money to buy it. If you want to have the nice things, you want to have the liabilities. Liabilities are things that take money away from your pocket. Assets are things that put money in your pocket. Your investments are assets. You're buying them to make money. Your car, your clothes, your shoes, your vacations, all these things are liabilities because they take money out of your pocket. Now, you want to have nice liabilities. Who doesn't? You're working to build wealth, that way you can have the nice vacations, so you can drive the nice car, so you can have the big home, so you can have the nice clothes. That's what you want. I get it. Nothing wrong with that. But I want you to be able to afford these liabilities with cash and not have to go into debt to buy them. So no more financing these liabilities. No more going into credit card debt to buy them. No more payday loans. And no more buy now, pay later. This is a trap that is keeping so many people poor, as I like to call it, broke now, broke later. Because you think that you're getting to borrow money for free. But if that was the case, How are these companies making money? I mean, there's a reason why your bank has to charge you an interest rate when you borrow money to buy a home. It's because there's a cost to money. So if these buy now, pay later companies are giving you 0% APR, there's got to be a catch, right? And most people don't understand what the catch is. And if you don't know what the catch is, then it's probably you. And the reason why is because they understand, number one, you're going to buy more things if you use buy now, pay later. And number two, when you don't pay off your stuff in time, now you get slapped not with 0% or 2% APR, you get slapped with 25, 27, 35% APR on your buy now, pay later programs. This is why I want you to avoid doing this. Stop financing liabilities, live smaller for a little while, that way you have more money to invest, that way you can pay down these consumer debts, that way you can use your money to make yourself rich instead of giving all your money to your banker and your credit card company. If you enjoyed this clip and you want to continue your financial education journey, I have another video that I think you'll love. All you got to do is click that button right over there. And for those of you who want to stay up to date on the top finance and business news, you can join Market Briefs, my free financial newsletter, by clicking that button below. Thank you for watching, and I'll see you in the next one.